Good afternoon. My name is Scott Redler, Chief Strategic Officer at T3Lab.com. Welcome to today's recap and look ahead. So Friday's jobs report happened. It was a shocking number. Market absorbed it pretty well. Did not go down. Definitely raising some eyebrows. Some people with opinions saying, how could the market ever go up if that's how weak the economy is, et cetera, et cetera. You know, a lot of people have been saying that since 2013. So that's the beauty of technical analysis, is you try and dislocate your thoughts of what you think should happen to what is actually happening. And on Friday, the market held in there pretty well, actually very well considering. And then if you came in today flat, kind of like I did, thinking, all right, maybe it was option related because of option expiration for Friday. Maybe it was, you know, the sellers need the weekend to digest it. You know, meanwhile, we came in today, futures were up a few handles, and then everyone had that same little level to make adjustments around, which was last week's high, around 2105. So you look here at the chart, you know, overall, remember this double bottom low? That feels like it was years ago. Well, that was the beginning of the year. Here is when we held higher. Here was your nice intermediate breakout, and then went back to highs. I guess the market wasn't ready. This was April, pulled back in, had your little red dog reversal at the 200-day right here, right as if everyone was saying that here you have your left shoulder, your head, but then this right shoulder did not turn out to be a right shoulder. It turned out to be a descending channel that could have had you switch gears right here when it broke it. If you were short here and didn't cover on this red dog reversal, this was your spot to get out, get flat, maybe get long. And then we went sideways for multiple sessions to figure out whether or not we could break higher. On Friday, or the day before, it looked like we were ready to go. A good print would have probably taken us up to this level on Friday. Instead, a bad print took us in and the market didn't go down. So now here we are, you know, above the weekly high. You're going to hear about it all day long on TV. You know, we did pause at this 2111. That's how high we got today. We got as high as 2113. And now if you look, you know, across the bow, so to speak, you know, here is your 2130. Yellen came out at 1230. You know, she wasn't as dovish as some people thought. You know, everyone was trying to say that if she's really, really dovish, the market could rally. I was thinking kind of the opposite, because it did feel like the market was set up for one rate increase, maybe two, and the market wanted that on Friday, didn't get it. So with Janet basically saying, Janet, oh, like she's my good friend, hey, Janet, saying that, you know, I guess they're on course for at some point, maybe not June, but probably July, especially if the market continues to go, that, you know, that'll keep a little bit of bid under the banks, that'll keep the tech kind of strong. You've seen a really strong bid in the Russell. Today, midday, when they sold off the S&P, the Russell didn't go down, and then you've seen some decent stock movement across the board. Do you need to be all in long? No. But fighting this thing and rolling up shorts every single, you know, week is definitely, one, losing your money, and two, you know, creating opportunity costs of situations that are working out. So let's go over a few sectors. You know, Qs, not the best, you know, acting sector, but still hanging around as long as it holds above this area. Hard to get too bearish. So you take a closer look here. It's still below the 2016 highs. So, you know, it's better when this is leading, but at any given point, it's still above the 8-day. So we'll see if that continues. Like I mentioned before, the Russell, whoo, that's been powerful. The Russell, you know, granted it was broken, you know, and it's come all the way down from a lot higher. You know, it's giving you some clues that there people want to play a little catch-up. Okay, you had this spot break. Remember this? This was the same spot the S&P broke when it broke that descending channel. Here is that red dog reversal, and it really never looked back. And this is already at, or actually above 2016 highs, showing you a little appetite for risk. So that's been kind of helpful, I guess, you know, if you've been trying to figure out what's next. You know, this descending channel here, this was broken and retested almost right around there. So technically, there's a lot of things that are kind of working themselves through tactically if you just don't read through the headlines and listen to all the, you know, the noise out there, because there's a heck of a lot of noise. Oil tried to get above 50. It feels as if, you know, oil could have a home at 54 soon. The XLE, which we talked about today in the morning call, you know, mentioned that, you know, you could see a little bit of alpha there, and at this point, you know, it's trading above this spot here, and it seems as if it's going to be taking out 2016 highs soon. Okay, it's been in a nice, ever since breaking above there, it's been in a nice trend above the AIM 21-day. Remember here when it broke this inside pattern? The OAHs was very impressive today. Look at the size of that move. Pow! That's big. You if some heard me talk about on the VTF about some of the ag plays, MOO, which is ETF for it, is having a nice little breakout move above mid-level resistance. So I was looking around the board to see what maybe could play some catch-up. So old friends of ours, remember these guys, even though they're very, very broken. Okay, yeah, it's CF, looking like it's trying to take out a lower level to the upside. So maybe there's some room to the upside there. I nibbled a little bit on that. Remember our old school friend POT, nice wide range bar. So maybe there's a lower level trade here. I'm trying to just find some things to do because our stocks aren't acting so great. Facebook give you a small move, but it's still lacking power. I am in some Facebook, but it's not really where people are making money. Maybe one day it wakes up, hopefully soon. Otherwise, people are going to lose some faith here. The pattern's still fine, but again, very lethargic. Maybe it needs an upgrade. Maybe it needs something, but still hangs around, but it's not where the real action is. So maybe tomorrow or something, if you can get above 119.43, it could act better. I think Netflix, is in the game. Stock had a big move when it broke above this 93.50, pulled back, held, and now it seems as if perhaps it wants to resume to the upside. If that's the case, maybe there's a little bit of a buy pivot tomorrow if it can clear this descending channel. I did nibble a little bit in the afternoon for that. Amazon made a new high, but still, lacking power. It tried to go and came off it. It's hard to really, these are, green, red, green, red, green. It's hard. Usually you want power in a leader like this. And granted, it might have closed at all-time highs again, but look at the lack of power. So, and then you have this ascending channel that you're thinking maybe one day this breaks and you don't want to be in there for that. So it's not the easiest trade. Google was kind of weak. Apple, a lot of guys were excited, or not excited, but happy that last Thursday when it pulled in towards below 97, I put that chart up. I'm like, if Apple's any good, it should hold 96.80-ish. Well, it did, and now you had your 3-day move to the upside. If you bought it on that pullback, which was right around here, okay, you made some money. Not a blockbuster trade, but some money. This is an out-of-sequence trade. It's been acting better ever since it took back this 92.75. In my morning note, I talked about TRIP many times. I did not buy it because it took, so long. But finally, those of you who were in it from this spot and had patience, you got paid pretty nice. I know Sperling was looking at Priceline. Priceline had a pretty big move today, pretty healthy. So that's, looks like there's something going on there that's just too loose, wide, and expensive for me. Expedia is not reacting well, but maybe it wakes up. A lot of these travel names woke up. I guess draw this descending channel here. If it holds above this, perhaps there's some kind of trade coming up, but it's been very choppy and not the best trade. It's below the moving averages, but so just don't be buying Expedia because TRIP and Priceline are up. GLD, hung in there. I tried shorting it once today. It didn't work. It's still above this gap, so showing some commitment to Friday's move. The GDX also hanging up there. Actually looked a little bit better. Some of those mining stocks actually look good still. So you have this gap that some guys got long on Friday to trade against, and it held half of this wide range bar. So some guys even were able to buy the dip. Here we are. We're in June. We still have another week until Brexit. You have some things acting better than others. Some high beta tech is okay, but they haven't been as powerful as we'd like. Some of the power came today in some of the oil names, in the XLE, the OAH, and some of those components. So a lot of guys were talking about that on the VTF. The banks, after getting hit real hard on Friday, all came off lows. And then in my morning note, remember I talked about those gap pivots for an extra cash flow trade. Well, a lot of them did it. So if you were tactically looking for JP Morgan to get above this spot, there was a small trade there. Now we'll see if it could hover above it and be a little healthier, but that was at least a trade. Bank of America, that got me really good on what's it called? Not good meaning bad. On Friday, came off lows, and there was a little bit of a trade into that gap. Goldman Sachs, let's see what that did. Also, you're talking a dollar to a few dollar moves here. This one came off the lows, got above this. Okay, this pivot was what? This was 156.54, went as high as 158. So something there, something to do, but nothing spectacular. And that's kind of like the mantra of the market. There's nothing really spectacular, but there's some moves here and there that you have to pretty much be a surgeon to carve out. Sometimes it's been easier to be in the indices than the individual stocks, especially if you think the market's going to go higher. The indices goes and some stocks just don't go the way we would think they would go. And that's the market we have in front of us, and that's what we have to trade. I know Thursday into Friday I was real long and got stopped out because who knew that we were going to hold in there the way we did. We did. But I think at least today we regrouped, got involved in some names, didn't just have short in the brain, and was able to take some of it back. For those of you who bought more on Friday and just stayed the course, you got paid a lot more handsomely than I did today. So that's you. Congratulations. And at this point, if you're trying to just be tactical, make sure you have your pivots. Pivots are very helpful in seeing who's winning the battle on lots of different time frames. And as of right now, the bulls are still winning the battle, and we'll continue to see and measure that if that's the case. Have a great night. I'll see you tomorrow.